Hey investors, thank you so much for watching. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Cloudflare. So Cloudflare has become was a very crowded trade back in 2021, and it was a stock that I can recognize that the appeal of it. There's a lot to be compelled towards, but as we approached October, November, it became really hotly priced. And as we look right now, the stock is down approximately 60% in the past several weeks, really. And if you think about it from the investor's perspective, it's quite difficult right now to get excited about businesses that are unprofitable and you're having to pay more than 20 times forward sales. In the case of Cloudflare, it's priced at approximately 27 times, 28 times, kind of in that ballpark. So kind of going to unpick here and think through what the investors should really be thinking about. So kind of, there's some good aspects that I think are worthwhile noting. But anyway, I get ahead of myself. So in the past several weeks, the stock has been obliterated. That's the same as we've seen with countless other tech stocks. I'm not even going to spend a lot of time on this. Back in November, I wrote an article. Actually, I wrote one in October, and then I wrote one in a follow-up in November, and essentially saying the same, thinking about the odds, because in investing, it's a lot, it's not just about recognizing the best company. You have to think about a little bit about your odds, and that's what really makes this kind of interesting, because if it was just about recognizing the best company, you just look at the highest return on investment, and you'd be, you sort it, the most entrenched customer, high returns invested capital, but you have to also think about that other dynamic, which is about pricing and the price that you pay, because that really changes the whole landscape. And yeah, I think that that's something that is worthwhile noting. So before the stock sold off, I wrote about Cloudflare, and I said that bears point to 72 times forward sales valuation has been too high. As we think through this investment, it's difficult to argue that investors are navigating with anything but the rosiest glasses. And since I wrote that, the stock is down 60%. And with such a dramatic sell-off, I think it's kind of interesting to kind of revisit this opportunity and think through this now. So Cloudflare is about to report its Q4 results in about 2 weeks' time, and it's a company that has very strong growth rates, and I suspect when they come out with their guidance for 2022, they're going to really put out a smasher. I'm going to come through to that in a minute. Now, before that, I'm just going to kind of highlight one of the things that I really like about Cloudflare. So Cloudflare is kind of like a CDN, a content delivery network, and it just keeps its users so entrenched, because you're not going to rip out your CDN, and they're able to upsell so many more products over time. So it's really high-tech business, and you can see that it's just a delight for customers. You can see here, customers spending more than 100K on annualized revenues were up 69% year over year as of Q3. So I've said this before, I'll say it again. If you can see high customer growth, that's often more insightful than looking at the revenue growth profile, because customers know best. If you see a rapid increase in number of customers, that just tells you everything you need to know. And if I was to build a bullish thesis on Cloudflare, that's what I would be pointing to right away. I'll be saying, look, you have a high customer growth rate, you have the net retention rate of 124%. With those two, so you're getting not only customers recognizing that you're the platform to go to, but you're also able to upsell them significantly over time. You don't need a lot more. If you don't want to just 101 land and expand strategy. So if I was to kind of build a case here, I would just start there. You couldn't dislodge me on that point. And as I've said, it's kind of when it comes to valuing these high quality companies, it's as important to think about the business's high gross margins, and Cloudflare has just an unrivaled gross margin. You compare it to other CDN players like Fastly or whatever, they don't even in the same ballpark. It's kind of like feels like wrong to even talk about it. Akami was another one. Yeah, I'm not even going to go there because I don't think it's fair to Cloudflare. Now let's take a step back, right? Cloudflare holds approximately 1.8 billion of cash now. It has 800 million of convertibles on its balance sheet, so it has a net cash position of $1 billion. If I was a shareholder here, I would say, okay, They have a very strong billion worth of cash on net cash position on the balance sheet. They're not going to need access to capital markets anytime soon. Okay, so this is something that's really a strong consideration to keep in mind. On the other side, bearish investors are going to point out that, Cloudflare is still free cash flow negative. And listen, I'm an investor, and I know it kind of feels like bad taste to talk about high gross margin business, and you shouldn't even talk about the free cash flow profile. But I mean, look, the stock is down 60%. If I'm not looking at that, I'm not doing my job. And you can see here, as the businesses continue to scale, they haven't seen a dramatic increase in the free cash flow profile that they've made. Now, something to keep in mind. So, as it stands right now, as we look out for 21 as a whole, even though the results are not out, I suspect we're going to see approximately negative 75 million of free cash flow from Cloudflare. Now, keep in mind that nearly 30 million of the free cash flow was then associated with the repurchases of the 2025 convertible notes. If we make the assumption, which I think is reasonable, that that is a one-off item, perhaps this implies that as a whole, probably come in around about 60 million or so of free cash flow for 2021. Consequently, it's reasonable to estimate that 2022 will probably see Cloudflare reporting negative 40 to 50 million of free cash flow. Now, that's a significant improvement from where it was in 2020. So in 2020, there were negative 92 million. If I think that it's going to be around negative 75 million for 21, for them to come to negative 45 million continues to move towards positive, or at least break-even free cash flow. Management says, okay, you guys are spending too much time thinking about the free cash flow. We're investing for growth. The long-term model is 20% free cash flow, 20% operating margins, and so you have a customer that's very entrenched, and that's what you should be thinking about. And okay, I get that, but ultimately, as we stand right now, it's kind of free cash flow negative. So it's kind of like, I can get that in the future it's going to be, everything's going to be okay, but I'm investing right now, so it's kind of like two sides of the equation. Anyway, so as I started kind of touching on this on introduction, when it comes to thinking about high growth businesses, the problem is you have to have a really strong conviction that they can grow at the range that people expect them to. So the consensus right now is pointing to approximately the high 30s CAGR for 2022 for Cloudflare. Now let's say that the consensus is wrong. Let's say that they actually grow at 45% year over year compared to 2021. That puts their revenues at approximately 940 million. That's just shy of $1 billion, okay? So for them to be growing at 45%, close to $1 billion in revenue, that's really, really attractive. Now, this assumption puts the stock price at 28 times forward sales. Now, of course, this is a massive drop from when it was priced at 72 times forward sales. Now, we could make the case that, it's a high quality business and it should be valued at a high multiple. On the other side of the equation, you can say, look, there are other infrastructure businesses that are also priced at approximately 28 times forward sales. And I'll point to, for example, Datadog. Now, in the case of Datadog, the business is already reporting positive free cash flow. And so I'm kind of like thinking myself, would I really believe that the same argument holds with respect to Cloudflare? Should I really be paying 28 times forward sales? Am I going to hope to see a lot of multiple expansion? And I don't know, man. If you start with a high multiple, you're going to it's going to be a tough game to substantiate that you should get even more of a multiple expansion. So I kind of put this quote out there just for interest, that I said, only when a tide goes out do you discover who's been swimming naked. And so I mean, ultimately this is it, right? Everything is kind of up in the air and you're kind of hoping around that you see a multiple expansion in 2022, but it's a tough game when you start with 28 times forward sales. I mean, it's tough. Anyway, I know all the arguments about Cloudflare, that it's a amazing business, founder-led, and it was priced substantially higher before. But just because something was priced substantially higher and is cheaper now, doesn't mean that there's more value, right? So also keep in mind that stocks don't trade in a vacuum, right? If you look around the rest of the market, it's not a stock market, it's a market for stocks, right? So look around, there are other opportunities. There are countless businesses that are very promising growth profiles very innovative, highly disruptive, and they're not priced as expensive as this. It's a real opportunity that there are so many really high quality businesses that are on sale. If you want to find out some of those high quality businesses, don't forget to check out my marketplace. It's called Deep Value Returns. Come in, I'll help you become a better investor. Check out what other people have said about my marketplace on Seeking Alpha. Pop over to Seeking Alpha, look up Deep Value Returns. Okay, thank you so much for listening, and I hope you have a great earnings season. See you soon, bye-bye.